Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. I'm Nur Ashikin binti Baharum. My group, Cik Nur Afifah Aina binti Idris, Encik Muhammad Hilman Aiman bin Basir, Cik Nurul Husna binti Ibrahim, and Cik Nur Shifa Afika binti Syaful Bahril will present on the topic of source of fund in Islamic financial.
In this presentation, we have 9 contents, which is the number 1 is introduction, component Islamic financial system, Islamic fund in Malaysia, principle of funds, types of funds, funds flow, Sharia compliant funds, differences and similarities fund and conventional, and the last one is the conclusion.
We start with introduction. Islamic banking can be defined as banking in line with the Islamic value system and ethos. In other words, it is an institution created to provide bank facilities and services, especially to Muslims based on Sharia. The Islamic banking means the implementation of banking operation based on Islamic principle. It is also an objective financial institution to implement Islamic economic and financial principle in the banking arena. During the development of Islam, Baitul Mal was made as institution that managed the property and finance of the community at that time. Islamic history also proved that Rasulullah sallallahu alaihi wasallam was considered as amongst the community at that time by practicing the practice of al-wadiyah. The concept of the Islamic banking is a direct involvement with financial practice, but it is based on Islamic Sharia and uses fiqh method. In simple terms, among the Islamic principles to be adhered to are the elimination of riba and the prohibition of any form of gharar and the prohibition of gambling, the focus on halal activities and commodities, and focusing on the concept of justice. The 7 main principles and concepts of Islamic banking are Allah Subhanahu Wa Taala as the absolute owner, man as the caliph, integration of moral values, elimination of zuri, profit sharing, being positive towards the economy, and issuing zakat. Although the Islamic banking is said to be bound by the above concept, it is still offers services such as conventional banking, such as deposit, credit facilities, money transfer, and so on. But what is different is that the profit and loss sharing system is an alternative to conventional banking system, which is based on riba. There are 4 components in Islamic financial system. Number 1, Islamic banking system can be defined as a banking system whose principle of travel and practices are based on Sharia. The main differentiating factor between an Islamic and others conventional banks is that all its business must be handled without involving any interest element. The basic of its business is also based on ruling of the Quran and Sunnah, which is based on the concept of fairness for the benefit of the community as whole. The comprehensive Islamic banking system is not only focused on the prohibition of usury, but it also needs to cover the legal, procedure, and instrument aspect that will be the basic for achieving justice and equality. In the other words, the Islamic banking will be a complete system only when it has its own Sharia law covering the entire spectrum in banking. Number 2, Islamic money market. Islamic money market. The Islamic money market refers to a market where the activities carried out are Sharia compliant and important as the medium of the Islamic banking sector in obtaining financing and adapting the portfolio in the short term, as well as serving as a channel for the delivery of monetary policy. Interbank financial and investment instrument will enable bank to have surplus fund to channel fund to the bank which in deficit, thus to maintaining the financing and liquidity mechanism to promote stability in the financial, economic and system. Bank Negara Malaysia introduced the Islamic Interbank Money Market IIMM on 3rd January 1994 as an intermediary to provide short-term investment resources based on Sharia principle to the Islamic banking sector. Through IIMM, financial institution with liquidity needs and short-term fund will get surplus fund in the market, and those with surplus short-term fund will invest their fund in the market. This market is also constitute of the overall infrastructure of the country's economic management, especially in highlighting the Bank Negara Malaysia in managing the country monetary policy. The third one is Islamic insurance, takaful. The concept of takaful is to aim to encourage and health and unity amongst the participants in line with the concept of ta'awun. In Islam, helping or providing assistance is highly recommended. In the takaful business, understanding of what this means is an important agenda. It is applies to all participants who take up takaful coverage to be sincere in order to guarantee each other in the event of a disaster. In general, the objective in the takaful industry actually have similarities with the conventional insurance industry. Both are instruments to help those who are unlucky to suffer misfortune. Clearly, both instruments are a modern way to transfer the risk, and it is customary for a reward to be given to those who are willing to accept the risk transfer. The fourth is Islamic Capital Market. ICM is a market that carries out capital raising and extraction activities based on Islamic Sharia. Through this market, is practice that the need of ICM in Malaysia is driven by encouraging development in Islamic financial system. The establishment of Bank Islam Malaysia Berhad in 1983 and Syarikat Takaful Malaysia in 1984, as well as the change in the country monetary policy, which promotes the dual banking and financial practice of conventional institution, stimulated the need for distinctive capital market that meet the Islamic muamalah. Malaysia established Islamic capital market is now fundamental to the changes that have been implemented since 1995 under the supervision of Securities Commission during the year, which was responsible for carrying out research and development activities of capital market products.
Hi, Assalamualaikum warahmatullahi wabarakatuh. So my name is Muhammad Hilfi Aiman bin Basir and my matrix number was 2020981417. Okay, for today I'm going to talk about the Islamic fund in Malaysia. Okay, companies are continually searching for new sources of funding to help them grow. The act of contributing resources to finance a program, project or need is known as funding. Funding can be initiated for either short-term or long-term goals. Among these various funding options, there is three options. The first one will be retained earnings. The second will be debit capital. The third one will be equity capital. For the retained earning, businesses sell goods and provide service for some more cash than it costs them to produce them in an attempt to maximize profit. For any business, it is the most basic source of financing. Okay, for the debit capital, private debit financing is obtained by businesses through bank loan. They can also raise funds by issuing debit to the general public. For the last one, which is equity capital, companies can raise funds from the general public in exchange for the property ownership stake in the companies, which is represented by share issued to investor who become shareholder after purchasing their shares. Okay, next we go through about the principle of fund. So basically in Islamic financial, there is two principle of fund. I just go through the surface. If you want more details, so you may asking us or asking me after I present my slide. Okay. So for the first one will be work capital shareholder, and the second one will be customer deposit. So for the work capital shareholder, working capital denotes a company's ability to pay its current liability with its current asset. The figure provide investor with an indication of the company's short-term financial health, ability to pay off debit within a year, and operation efficiency. The differences between a company current asset and current liability is its working capital. The difficulty here is determining the appropriate category for the vast array for asset and liability on a corporate balance sheet in order to determine a company overall health and ability to meet the short-term commitments. Okay, for the next one will be customer deposit. Customer deposit is working capital is simply calculated by deducting current liability from current asset. Calculating the current ratio can be beneficial as well. The current ratio also knows and the working capital ratio provide an immediate assessment of a company financial health. Okay, I think that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurusna binti Ibrahim. I will proceed for present. My subtopic is type of fund in Islamic financial in Malaysia. The Islamic financial system broadly refers to financial market transactions, operation and service that comply with Islamic rules, principles and codes of practice. These laws are rules required
certain type of activities, risk or reward to be either prohibited or promoted. There are two different approaches to develop modern Islamic financial product and service. Okay, first, approaching identify exciting conventional product and services that are generally acceptable to Islam and modify as well as remove any prohibited elements so that they comply with Sharia principle. And the second approach involves the application of various Sharia principles to facilitate the origination and innovation of new product and service. Okay, there is some prohibited element of a commercial transaction that we know riba, which interest, horror, uncertainty, maisir, which gambling, and non-halal, which is prohibited food and drink and immoral activities such as arak. Now we proceed to the type of funds in Islamic finance lah. First, mudarabah. Mudarabah is profit sharing, less borne by capital provider. Mudarabah offers the owner of capital the opportunity to invest his capital in a certain project without becoming involved in managing that capital and limit his liabilities to the capital committed. The salient feature of mudarabah is the capital provider cannot claim a fixed amount of profit and ensure return on his capital if the project is profitable, as the profit will be distributed based on pre-agreed ratio between the capital provider and the entrepreneur. In this case, who solely manage the project. If project is making loss, it shall be borne solely by the capital provider and not on the part of entrepreneur, unless the loss is due to negligence of the entrepreneur. Okay, next, musyarakah, profit and loss sharing. Musyarakah, which is analogous to joint venture, where both of the entrepreneur and investor contribute to the capital of the operation, which is asset, technical and managerial expertise, etc., in varying degrees and agree to share the return as well as risk in proportion agreed in advance. Musyarakah, as we know, is sharing. If you lost together. If you have big profit, you share the profits together. Okay, next, murabahah. Okay, murabahah is trade with markup or cost plus sale. Murabah is widely used for instruments for short-term financing, which is similar to more conventional purchase of finance. Under murabahah, the seller purchases the asset at cost and sells it back to the customer at markup price agreed by both parties. Essentially, it is an agreement that refers to the sale and purchase transaction for the financing of an asset of project, whereby the cost and profit margin are made known and agreed to by all the parties involved. Next, istisna, which is purchase order, a sale and purchase agreement whereby the seller undertakes to manufacture and construct according to the specification given in the agreement. It's rather similar to buy and salam, with the main distinction being the nature of the asset and method of payment. Istisna generally covers those things which are made to order, and advance payment is not always necessary. The method of payment is flexible according to the term agreed by the contracting parties. Okay, next, ijarah. Ijarah is lease financing. Ijarah, which is similar to leasing in conventional financing, is a popular instrument designed for financing an asset or equipment. It is manfaat or benefit to the right to use the asset or equipment. Under ijarah, the lessor lease out of asset to the client at an agreed rental fee for a predetermined period pursuant to the contract. Now, to the tawarruk. What is tawarruk? Tawarruk is one of the products offered by Islamic finance instead of deposit financing, liquidity financing, and personal financing. In the specific transaction, those kind of Islamic financing use murabahah and tawarruk as a product to guarantee consistency in belief and practice. The functioning of tawarruk in Malaysia is overseen by the Sharia Committee. In addition, advice from Sharia Advisory Council, which is SAC lah, the higher Sharia body established at Bank Negara Malaysia. Last,
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Afifah Aina binti Idris, and I will continue for my part. There is funds flow. Fund flow is the cash that flows into and out of various financial assets for specific period of time. It usually measured on a monthly or quarterly basis. Fund flow doesn't measure the performance of any asset. Funds flow are a reflection of cash that is flowing in and out of financial assets. For example, with mutual funds, fund flow measure the cash involved in share purchases or inflows and the cash resulting from share redemption or outflow. It doesn't say anything about how well or badly a fund performs. Alright, to understanding about the fund flow, investors have a choice of where to allocate their investment capital, and normally it in financial market that they accept to be profitable. If they then contemplate a downturn in the market and their investment, they may extract their investment capital and any profit. This movement or investment capital is the fund flow of cash in the financial market. So as we can know, fund flow are a reflection of cash that is flowing in and out of financial asset. So investor can look at the direction of the cash flow for insight about the health of specific stock and sector of the overall market. So as we can know, fund flow does not include any money that is due to be paid. It looks at only actual cash that was paid into or out of the asset. Okay, now we can go to the fund flow statement. Okay, what is the fund flow statement? A fund flow statement reveals the reason for these changes or anomalies in the financial position of a company between two balance sheets. This statement portrays the flow of funds or the sources and application of funds over a particular time. So, why we need to prepare a fund flow statement? A company financial statement already include a profit and loss statement and a balance sheet. So, why is a fund flow statement needed at all? We can look at this point. The first one is a profit and loss and balance sheet will show a company financial position, but will not explain the reason for fluctuation or variation in within the company financial or cash position. Next, a profit and loss and balance sheet will depict two sets of figures, the current and previous year, but will not explain why movement has happened. Alright, now we can go to the Sharia compliant fund. Sharia compliant funds are investment funds that are governed by Sharia law and Islamic religious principle. Sharia compliant funds are a type of socially responsible investment. For understanding about Sharia compliant funds, Sharia compliant funds are one of several types of social responsible investment. The funds, like other social responsible fund in the environmental, social and governance, like ESG universe, screen potential portfolio investment for specific requirement desired by Muslim. So as we can see, Sharia compliant funds are investment funds that comply with Islamic law. They are different from conventional investment funds because they have many requirements, such as appointment of a Sharia board and prohibition from investing in companies that derive a majority of their income from sale of alcohol, pork product, gambling, etc. While Sharia-compliant funds have grown at a respectable clip, it is difficult to accurately estimate the industry size of or valuation.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Shifa Afika binti Syafu Baharin. So I will be continue about the differences and similarities Islamic fund and conventional funds. So the first slide it is the differences and similarities Islamic fund and conventional fund. The first one is legal trading accounts. Legal trading accounts in Islamic investment must be registered and listed on Bursa Malaysia and have Sharia compliant approval from the Sharia advisory. The same is true for conventional investment, but the difference is that conventional investment don't have Sharia compliant approval from MPS. Yeah. So the second one is the concept of investment funds. Okay. The similarities Islamic fund is Islamic investment usually uses the al-mudarabah method, which is a profit and risk sharing contract between the capital provider and the capital recipient, while the conventional fund it is usually just a deposit product. The return for Islamic fund is usually a percentage in dividing the profit and loss of the according to the amount of fund investment. The third point is about current accounts. The current accounts bank can use this fund for investment and other purpose. It allows satisfaction of having the money safely deposited with a bank with the additional assurance that the bank is not investing contravene Sharia principle and the Sharia free of cost service are offered to all customers across the board means all free services, but conventional no specific underlying mode is used in current account. The bank can use this fund for investment. Free of cost service are offered to customers which tantamount to interest lah. For five leasing or ijarah. Okay, for Islamic rental start after the delivery of asset, not from the day the price has been paid by bank. While conventional, this comments the everyday very day on which the price is paid by the bank, whether the customer has taken the delivery or not. And for 6 point, lending or financing. For Islamic banks are not money lending institutes, but they work as a trading or investment house. And for conventional conventional banks, almost the all the financing and deposit side product are loan based. Conventional bank treat money as a commodity and lend it against interest as its compensation. And the last point from me is conclusion. As a Muslim, it is not wrong to engage in profitable activities such as investments. However, we need to be careful in investing so that the investment activities carried out always comply with Sharia and avoid activities or elements that are prohibited in Islam. The main basis of Islamic banking in a nutshell is that the business conducted must be based on the Islamic faith. If you plan correctly, the combination of these two types of product can influence and help your finances. Most importantly, we need to do a thorough research before choosing a product and type of banking, so we don't regret it later. Islamic banking and finance is in Islamic economic sub-discipline, and the objectives and operative mechanism are based on Sharia. It is mainly an equity scheme which provides a more ethical and effective alternative to the conventional interest-based system. The organization carries on business by means of instrument of profit and loss sharing. Okay, so that's all from us. Thank you. Assalamualaikum.
That's all from us, Doctor. Hope you will enjoying our presentation. Thank you for your time and thanks for watching. Assalamualaikum.